Donald Trump has just slapped a massive 50% tariff on Indian goods. Why? Because India continues to buy discounted oil from Russia. But what does this mean for our economy? And how is the U.S. justifying such a drastic move? Let's break it down in 5 minutes. Tariffs are basically extra taxes on imports. Imagine a shirt from India costs 1,000 rupees. If America adds a 50% tariff, the price jumps to 1,500. Naturally, U.S. customers will buy less. On paper, tariffs look like protection for local American jobs. But in reality, they disrupt global trade, raise costs, and often backfire. Trump claims India is acting as a clearinghouse for Russian oil, buying cheap crude, refining it, and then selling it globally. His trade advisor Peter Navarro called this opportunistic and warned that India can't expect to be a trusted U.S. partner if it continues this way. Trump also said removing tariffs would risk a $15 trillion investment collapse and turn America into a third-world nation. In short, he's selling this as a patriotic economic safeguard. But for India, the consequences are serious. First, exports. America is our biggest market. Textiles, gems, pharma, IT all will get hit. Second, jobs. Reduced demand means lower hiring, salary cuts, and job losses in export-driven sectors. Third, economy. Analysts warn India's GDP growth could slow down by up to 1% if these tariffs continue. In fact, some reports already show India facing Asia's biggest earnings downgrades because of these tariffs. This isn't just about India. Other countries could retaliate, leading to a trade war. Global supply chains, already shaken after COVID and the Ukraine war, would weaken further. Economists like Jeffrey Sachs have even called this the stupidest tactical move in U.S. foreign policy, warning that it might push India closer to Russia and China, exactly what America doesn't want. So, is Trump's move justified? From his perspective, yes. It looks like tough love, higher revenues, and political strength. But from an economic standpoint, it's risky. It hurts India, raises costs for Americans, and strains a critical partnership. For India, the answer lies in diversification. Sell more to Europe, Africa, Southeast Asia. Strengthen domestic demand. And continue building strategic independence. Because in the end, tariffs are not just taxes. They are weapons in a global economic war. And right now, India is on the front lines.